All right, we're here. Welcome to the March 2023 episode of the Presale Pulse. Trending topic, a real estate show dedicated to the hottest intelligence in real estate. I'm Lalonde, and I'm thrilled to be joined by none other than the trendiest real estate professionals out there. We have Emily Canada's Suzana Goncalves and Brittany Reimer. Guys, welcome.
You're pretty trendy. I don't know if I could take that home, but you can for sure.
I appreciate that. It's generous.
Let's jump into it. This is all about an exciting recap of our exclusive invitation-only event last week at the Annex Theatre in Vancouver. Along with our amazing partner, REW, we welcomed around 100 esteemed guests to celebrate the launch of their highly anticipated 2023, theirs or ours? Both. 2023 Intel report. Now, we had the biggest names in Canadian real estate sharing their expertise and making predictions for the year ahead. And
Biggest names.
Huge. It was huge.
Like Brian Lalonde.
I forgot that I was there. We covered everything from sales to inventory, interest rates, construction costs, immigration. We covered it all.
I mean, we just said that. Given you were on the panel yourself, Ryan, was there an overall theme to the conversations that were happening there? So listen, I was there, but I'm kind of already forgetting.
We need a wider angle on this lens as my head grows. Yeah, thank you. I appreciate that. So I think there's really two things that we want to cover here. One of them comes from one of the fellow panelists, Steve Soretsky, who had a really simple answer to the question, what's the market? Where's the market at today? And his response was confusion. The other is opportunity. Let's start with the first part. Now, we're in a period of a lot of seemingly contradictory market conditions, all sorts of areas. We're seeing both sales activity and new listings hit all-time highs, multi-year lows at the same time. It's very odd. There's a talk of recession and an economic downturn. And then there's the job market, right? It's rock solid. Household savings, they're up. They feel like they're going up. We're hearing in the news about how significant this slowdown is, and yet we are seeing several pre-sale projects, right? Several achieve robust absorptions right out of the gate. Let's spend a couple of minutes digging into this. What's going on out there?
Yeah, for sure. We're seeing all sorts of market conditions that we wouldn't normally expect to see. At the same time, it's not easy to see through the fog right now. As you said, Ryan, in 2021 and early 2022, everybody was a realtor. Now in 2023, everybody is an economist.
It's so true. Like, everyone's trying to read the tea leaves right now, right? Everyone's making a prediction. I think the economist part definitely resonates around our dining room table. It doesn't matter whether it's my wife or it's my 9-year-old daughter. Everyone's talking about where this market is going. I feel like I have not had this many conversations about economics since my first year in macro.
With that being said, Ryan, there was some really great conversations around predictions for next year. And one of the main topics that came up was this 3-day rescission period. Whether we disagree or whether we agree with this new government policy that was recently rolled out. So love to hear your thoughts on this.
I'm going to kick that over to Suze.
Sure. Suze?
I always have opinions. I mean, I think the consensus really is that it's not going to do much. I think this is another example where the government tried to step in, tried to do something and make it seem like they were doing something, but they kind of missed the mark a little bit. Right now in a down market, we're seeing removal subjects of 14 days or, in and around there. But in a good market, we know that the way our market runs in a good market is it's still super active. And when there's not enough inventory, you're just trying to get a home. And so even though you have 3 days, technically, it's not enough time to figure out your financing. It's not enough time to get another inspection in. So you basically have to be certain. And even if you aren't, you're so worried that you're going to miss out in a rising market that you end up just going through with it anyways. And I think knowing the values of our homes as well, nobody wants to lose the money, the penalty fee that also comes with it. So truthfully, although I appreciate the intent and what they were trying to do with it, I suspect it really will not make any kind of difference at the end of the day.
Yeah, and with the market the way it's been, really multiple offers haven't been as prominent over the last few months. And so the impact has been quite little. What will be interesting to see over the next few months is when the market does start to run and multiple offers come in, the administrative and process nightmare that this actually puts on a lot of the brokerages now that are having to manage this new policy. And so as a managing broker, that's one of the things that comes top of mind for me. It wasn't discussed at the panel, but certainly it's a challenge.
Well, I mean, I'm going to challenge a little bit because we all know that realtors are really good at administration.
Oh, so good. Yeah, number one selling feature.
Let's put more.
Great at administration.
Yeah.
Says nobody.
I think no question, like that's part of the problem right there, right? And managing brokers just got a little bit busier with that one. And then I think the other component is that, you only have so many levers of how to negotiate a deal, right? How do you find that common ground, home buyer and home seller? And so what you've really done is you've taken maybe something that's tied to dates, something that's being tied to an unconditional offer. And you've said, you know what, everyone's now working on the same playing field. So if you had 5 levers, you now have 4. And that puts more pressure on those other 4. And one of those core levers is going to be price.
Yeah.
Right. And so really, thank you very much for just putting more pressure on people increasing their offer price to win early on in that bid and not have to deal with the 3-day. And I just don't get it. Like, I think it's working against us. Guys, I feel like we crushed that topic. We're good? Yeah. Check.
That's it.
All right. Thank you. Thank you also for the viewer that flagged that. We love taking questions. So again, just a prompt to everyone that's watching this. If you're looking for us to tackle some other trending topics, please comment, right? Click those links below and flag. We are always happy to improve upon what we're talking about and making sure that content's resonating. One of the next topics that we wanted to cover today is all about what is happening in the marketplace around failed programs. There has been some recent news stories covered about some of the shifts in, I think, cash flow of different development parties as a result of higher interest rates. And I think, the audience really wondering, can we expect more of these failures in the future? And is there more pain ahead for developers that are under very stressful economic conditions? I'm curious, what do you guys think?
Well, I think there is a bit more pain. I don't think it's as big a problem as some people, particularly some people in the media, want to make it out to be, because I think that we have a lot of experienced developers in our market as well. Having said that, it is easy. There's a risk to development, and it is easy to get caught out. And so I do think that there's potential for a couple of projects that might find themselves in this situation.
I think what lands for me is like, you can look to the past in trying to understand how that reaction and maybe what the probability of that in the future could potentially feel and look like. And I think, in the circumstances that was flagged recently, there was challenge and we have a resilient industry, and we have an industry that has been through many cycles. It's a sophisticated industry, and they're able to relieve that pressure very quickly. Those partnerships were reformed. Ultimately, we saw a shift in ownership, shift in transition. Home buyers were safe through that entire process. I think that you can expect more of that. So if we end up where a project is in trouble, I think that there's many active development community members that are going to step in and be able to relieve that pressure. And in some cases, those projects will shift hands over to new developers. And in other cases, I think that there'll be many lending opportunities for financial partners to come in and relieve that stress.
Yeah, I agree. I mean, I think of Fraser Valley in particular. I certainly don't feel like I could think of any particular site right now in the Valley in particular that would run into this scenario. I think so much of this is around strategy too, right? As we head into the spring market, there are going to be a lot of programs. If they're not sure, if they're not certain they're going to hit their pre-sale test, then they just won't go, right? Those programs will be parked, and we've seen a lot of that already over the last 12 months. So I have to agree that I think the headlines are making this out to be a much bigger challenge than it really is. And, the sophisticated development partners with the experience are really not going to be running into much of this over the next few months.
Like, I think that if you had an opportunity to watch the March edition of the Presale Pulse, one of the key takeaways there is that resale is trending in the right direction, and that presale values are ultimately holding very close to some of the historic highs that they were able to achieve in 2022. And I think what that really means is that the industry expected for us to be into for a really rocky road throughout 2023, and already we're sitting at March, and it feels like the worst is probably already behind us, right? And if that is the case, then some of those development partners that might have paid too much, according to other experts in the industry, I think they're going to be bailed out. And so I think the probability of future failures is very, very, very small. I think there'll be some challenge, but I think that others will show up and be able to relieve any of those stresses as they arise.
Yeah, perfect segue into our next topic, which is pricing predictions for 2023, both in Greater Vancouver and Fraser Valley. What do we think, guys?
What do you think?
$1 million question.
Are you talking Fraser Valley or Metro?
Let's start with Metro.
You want to start with Metro? Yeah. Okay. Well, I mean, benchmark, it's up, right? Most marketplaces and single-family detached townhouse and apartment, kind of anywhere from like a few fractions of a percentage point. In some cases, it's as high as just under 2%. right? That's a pretty notable 30-day shift. And we're seeing sales ratios. Here's the kicker. I don't know if you guys jumped into the data, but if you look at February data of sales to listing ratios, if you look at the numbers in all of the active geographies across the Lower Mainland, they are very similar to the percentage points that we were experiencing from a sales to listing ratio standpoint in the same time a year ago. That was one of the hottest Februarys that we've had on record, right? Crazy price appreciation. All those sales ratios, they're kind of between 35 and in some cases 200%. Like, this is an unbelievable time in the marketplace. So it's hard not to believe that we're not going to see continued rampant escalation.
I think I maybe am a little bit less bullish or maybe a tiny bit more conservative than you are. I think that there's, back to this idea of confusion, I think there are a few things that we're still watching in the marketplace to understand how that's going to actually end up playing out for the rest of the year. Having said that, all the other fundamentals that, you talked about on the panel and we've been talking about around immigration and lack of supply, and obviously these February numbers that we just saw, I do think that the worst is behind us. I do think that, we're not going to see a 10% decrease. Like, pricing is going to remain probably pretty stable with maybe an opportunity to escalate. But I guess I'm a little bit more conservative, and I feel like there's a few things we need to watch, which will determine just how far. But it definitely feels like the declines are, for the most part, behind us.
I mean, this was the first month in a long time that we've seen an increase in pricing, right? So I think, when I look back to where we were in early 2022, particularly on the townhouse market, I mean, we saw quite an adjustment, particularly on the pre-sale side. You look at Langley, Surrey, Abbotsford, and we saw some prices come down $150K to $200K a door. Those are big decreases. And so, when I think about this upcoming year, I feel like there's probably some opportunity, particularly on the townhouse side, when you see such an adjustment, that we will see some gains. I think for condos and single family, I think it'll be quite steady. But I think anything coming to market over the next 6 months, there's a bit of a window of opportunity here, right? Like, we were talking about this afternoon. A lot of programs are paused. They put vendors on hold, creative firms, ID. They are not going to be ready to pull the lever to be in market this spring. And so, that is the question, is there this window of opportunity to have product enter market? At what price point is another conversation, but certainly the market is there and absorption is steady. We're seeing really good absorption on pre-sale projects right now.
Yeah, and I think the other, interesting thing to remember is we are now a year into this, right? It was last March that we started to see the peak in the market and now the rate changes happen. So we're 12 months into this thing. People get tired of waiting. They don't want to put off purchases sometimes because they have genuine needs. They have a growing family or, just life happens. And, housing often comes with a genuine need for something. And anyone that's been waiting and sitting around, like, eventually you get tired of waiting around. And we're 12 months into this. So, that window that you talk about, I think is a good flag. And because we're going to see just people come back because they don't want to put their life on hold.
I think it's the restaurant analogy, right? Like, if you didn't eat out last night, that doesn't necessarily mean that you need to eat out tonight. I think when you are considering home buyer and home ownership, it's, like, if you didn't buy yesterday, you still need to buy today. And I think that sense of urgency just grows over time. And that's what you're talking about. I think the other thing that's really interesting is, we're seeing price appreciation earlier than I think any of us would have forecasted, right? Under no circumstances after January would I have expected to see a 1.1% increase on benchmark in a 30-day period. And I think that you're right. I think that the guitar strings are going to continue to vibrate up and down in terms of demand and supply. And I think that if supply can find its way into the market in March, April, and May because benchmark is going up and people are willing to actually transition homes, then hopefully we'll see a leveling off on price. But if people continue to hoard real estate, I think that we're going to be in a challenge because immigration is not going away, right? We are going to set benchmark records for immigration this year, and then we're going to set it next year. And then it's going to be set the year after that and the year after that. And each year, as of 4 years ago, we were already underbuilding. So we're not making up those gaps. Here's a quick question. Last year we think around 8,000 doors came to market, right? In 2022. How many doors do you think are coming to market this year?
Oh, putting us on the spot.
That wasn't in the notes.
No,
Hope you read the intel report.
yeah, exactly. I think it's going to be more. I think I'll put down an anchor for you too. I'm gonna say 9,500.
9,500.
Maybe 10.
Maybe 10. Britt?
I feel like it's going to be less. Like, I just think that to the point earlier, like, just so many programs paused and whether they'll be ready. And I really believe that, like, over the last 6 months, people have really had this 2024 vision in their mind that they've been chasing down. And so, I think that year will be substantially more, but I'm gonna be a bit more conservative and say 7,000.
7,000, less than last year. Oh,
I love the disagreement.
I'm going to go 10. I want to be double digits. I want to see it. I'm an optimist, but it's just hard for me not to believe that if we don't see another 3 months of strong performance, it's going to be it feels like it's going to be circa 2020, right? Remember 2020, right as we came out of COVID in the summer months, one developer dipped their toe in Metrotown, it hit, then the next one dipped, it hit, and then all of a sudden we saw the rush, and it's like...
But will they be ready, Rye? That is the bigger question.
I think some people are, and I think that they're going to be pushing for the fall, which is why the window before the fall is probably a really good one.
Oh, that's interesting. Yeah, we were talking about the window was going to be the fall, right? The window was going to be like October, November, December.
And now it might be sooner.
I think you're right. I think the smart money would bet on going sooner and taking advantage of anyone that kind of has their pants down right now, and they were slow playing it, really thinking that 2024 was going to bring the rain. I just don't know that's going to happen. I think it's going to be earlier.
We'll see.
Oh, I love it. Can we talk quickly interest rates? Right, that's a thing right now as of today.
Yeah, I mean, we talked about it today. We are tied a bit to the U.S. So, even if we want to pause, we may be forced to match a little closely to the U.S. than we necessarily need to for other reasons.
I mean, I think this pause and this hold is a confidence booster for buyers right now in the market. Like, they're going to see this, and I actually think this is going to be their trigger to be like, it is time to jump into the market.
Which is why we'll see another increase.
Which is why
either the next semester or the one after.
Exactly. Yeah.
Susie, you and I were talking after the panel, and I think I had said from October of 2023 to October 2024, you can expect double-digit price appreciation. And you were sharing, oh man, that's a bold statement. From
2022 to 2023, yes.
2023 to 2024.
Yeah, I thought you were being a little
bullish.
A little bullish.
Yeah. Even but as you look at like March stats, you still think it's a bit too bullish?
I don't think it's out of the question. There's just a couple of things, again, that I think we have to continue to watch to see how that potentially impacts things here locally that might still pull things back. Or if we get too much supply too quickly, how does that affect things? So yeah, I don't think it's impossible, but I feel like it might also be prudent to be a bit conservative from a planning standpoint on that, which is, I think, probably why I lean that way. And actually, I was sitting beside one of our clients, one of our developer clients, and when you said it, we both sort of stood up or sat up a little straighter and was like, oh, okay, like that's a little more positive than we expected. But I love the perspective and I appreciate where it's coming from.
I'm kind of curious, Britt. What are you thinking about for the rest of the year in terms of appreciation?
That is a tough one. That is a really tough one. I mean, it's hard not to look at the last month, and say, okay, we're on an upward.
We're trending.
Here, right?
It's not a trend if it's one time.
I agree, and that's why I think it's
not a trend yet. Yeah,
it's not a trend.
It's just a month data point.
It's a moment.
In May we'll know. But I mean, I do, like I mentioned a little bit earlier, I do think that the townhouse market, there's going to be some pockets I think will bounce back and see bigger gains than others that will impact the entire market. I think that it could range anywhere between 5 to 10% by the end of the year.
5 to 10% up.
Up, yes.
So then
I always
the mindset.
I always have to be optimistic.
So the mindset from 2023 to 2024, then you would probably say is fair.
Yes.
I'm kind of thinking about. I was on this panel once with Ward McAllister, and he talked about how dead cats do bounce, and just the reference to the marketplace that we're in right now. And I think that's cautious. We have to be cautious. right now, right? Like I think it is hard not to read too much into that data. It's just one data point, but looking at all of it and then dropping in immigration, just I think what we'd all agree on is it's a really exciting marketplace to be in right now if you have land that's ready to go. And what we can share is like prices are holding in pre-sale, right? There was a bit of a hurdle test that we were seeing in the latter half of Q3, Q4. We said multiple times at realtor events, like multiple times I think on the Pulse, that the biggest mistake that someone's probably going to make in real estate is that when they look back a year from now that I did buy today, right? And that was said in October and November. And I think that's probably seeming to be true right now. But we have a little bit further to go before I think all of it really is in the rear view. When it comes to rates though, if you had to predict, are we going to see more rate increases this year?
I think we will. But I don't think it's a lot. I think it'll be just a little bit. I think if they could, they would hold it steady. But I think they're just continuing to try to balance the demand and the desire. And so I think they will have to raise it again.
Right.
I would agree with that. I think less than 50 basis points, but an increase.
Oof, yeah. Feels like it's going to be consensual with the Feds down south.
Yeah.
Do you agree?
I don't know.
They can't hold it.
I'm suffering. They can't hold it?
They can't hold it. Fortunately.
God. I think it gets to be, I think it's an exciting prospect to think about the idea that if we continue to push rates up, we actually see the pullback in the job market that probably our industry needs and probably the country needs from an economic standpoint, and resetting a number of habits and making sure that businesses truly are driving efficiency and productivity and like maximizing economic productivity. But I don't know that we're going to get there. It does feel like we have a government and we have a policy at play that is all about a soft landing right now. And I think it's really hard to think about how the political structures that exist today are going to be comfortable moving against populist politics, right? Like consensus decision making is part of the play right now, and it just feels like less interest rate increases than I would have hoped for, and that might mean zero.
Well, I'm looking over at Brad, and I think that's a wrap.
It's a good wrap. Yeah, it's time. Thank you so much for joining. Been a pleasure. Really looking forward to seeing you guys next month. We'll be dropping the Pulse, and then of course, as always, at Trending Topics that follows. Any comments, any feedback, of course, any topics you want us to cover, please click those links below, drop it in the comment section. We want that feedback. And of course, check out some of the other links that relate to Newswire and subscription to all of the other products and services that MLA Advisory is producing on a daily, weekly, and monthly basis. We'd love to make sure that you continue to have your fingers on the pulse. I think that's it. We'll see you guys next month.